ready for this? Bitcoin just smashed through $100,000.
Yeah, it's pretty wild out there.
It is. I mean, between the ETFs from like BlackRock and Fidelity finally launching,
Oh,
all the political stuff going on, plus like everyone waiting to see what happens with regulations. And it's a crazy time to be in crypto. Super exciting for sure, but also
Yeah, a little scary.
a little scary, yeah. We all remember FTX, right?
Oh, absolutely.
So today, we're going deep on crypto exchanges because honestly, where you decide to actually hold your crypto
Right.
can make a huge difference.
It really does. It's not just about like picking the right coins anymore. It's about deciding who you trust with your digital assets, basically. And not all exchanges are,
Yeah.
they're not all the same.
Not even close.
Not even close.
You've got to look at security, fees, what features they offer, even where they're based.
All of it matters.
All of it, yeah.
It's amazing how fast things change, too. Like we went from talking about, what was the...
Crypto winter.
Yeah, crypto winter to crypto spring practically overnight.
Right. It's crazy.
But this time feels different, you know? The big institutions are finally in the game now.
Yeah, that's a game changer.
Completely changes the landscape.
Okay, so we're not just picking coins anymore. We're also picking who we trust to, like, hold those coins for us, right?
Exactly.
And that's where we come in. We've got Forbes' latest top 25 crypto exchanges ranking. We're going to break it all down, help you figure out what it all means.
Right.
So you can make, like, smarter choices as an investor.
Informed decisions, that's what it's about.
Exactly. So let's start with the elephant in the room, right? FTX.
Oh, yeah.
It crashed and burned back in 2022. That was a huge wake-up call for the entire crypto world. So I guess, like, what are the lessons learned from that whole mess, and how do they apply today?
Well, I think the biggest lesson is even the exchanges that seem like they're too big to fail,
Right.
they can absolutely crumble.
Yeah.
FTX proved that.
For sure.
So that's why security, transparency, and, regulate, those are all non-negotiable now.
Yeah.
It's not enough for an exchange to just have like fancy features or big name endorsements. You really have to dig deeper, look for proof of reserves, independent audits, and some serious regulatory compliance.
So basically do your homework.
Yeah, exactly. Due diligence is more important than ever.
For sure. And that's where this Forbes ranking is super helpful.
Yes, yeah.
I mean, they've done a lot of the hard work already. They've vetted the top players. But instead of just like reading through the list, let's talk about some of the more interesting like stories and trends. What really stands out to you?
I've got to say, the fact that CME Group is #1 on the list, it just blows my mind a little bit. They're this 127-year-old institution. They're known for trading like agricultural commodities.
Butter and eggs.
Yeah. Exactly, butter and eggs. And now they're like the top dog in crypto futures. It's just kind of wild to think about.
It is. So the folks who are trading butter and eggs are now leading the charge in like the most cutting edge financial market.
It's kind of ironic, isn't it?
It's a little ironic.
But it also tells you that traditional finance is taking crypto seriously, like really seriously. Institutional money's flowing in, and these institutions, they're looking for partners they can trust.
Right.
Right?
Makes sense.
And CME Group, with all their regulatory strength, being overseen by the CFTC and all, and their, long history of just being really secure and stable.
Yeah.
They fit the bill perfectly.
So it sounds like CME Group is like the gold standard then, but I mean, I'm guessing they're probably not really for like the average investor, right? Like me.
Yeah, you're probably right. You can access their crypto stuff through, traditional brokers like Schwab or Fidelity.
Okay.
But those minimums are going to be pretty high.
Yeah, that's what I figured. So not really for the everyday investor, but still, it's a big sign that things are changing, right?
It is. Crypto's not just for like the tech geeks and the risk takers anymore. It's becoming more accessible and, more integrated into the like regular financial system.
That's interesting. So we've got this like old school player at the top of the ranking. But what about the names that are more familiar to like, people who are already in the crypto world?
Right.
Coinbase, for example, they came in at #2. They're publicly traded, they're US based, and they hold like a massive amount of Bitcoin.
Yeah, they're huge.
But I've always heard that their fees can be a bit high, Is that is that worth it?
Coinbase is kind of a unique case. They've got that brand recognition. Their platform is really user-friendly, and their security's been really good.
Yeah.
They have a solid track record. But yeah, the fees, they're definitely higher than a lot of the competition. Right. So I guess the question is, are you getting what you're paying for?
Right. right.
Some people say that, you're paying for that extra peace of mind.
Yeah.
The security, the regulatory compliance, especially, after the FTX meltdown.
Yeah, I guess that makes sense. But are there any, like, drawbacks to their approach? I mean, other than the fees, what else should I be watching out for?
Well, there's their recent move into offshore derivatives in Bermuda.
Bermuda.
Yeah, Bermuda.
That's interesting.
It could mean they're willing to take on more risk.
Yeah.
Yeah. Or it could just be them trying to diversify their offerings or tap into some new markets. It's definitely something to keep an eye on.
Yeah, for sure. Offshore derivatives, that sounds it sounds a little risky, like we're heading back to the Wild West of crypto.
It can be, yeah. But it's also a really fast-growing part of the crypto world. And Coinbase isn't the only one making moves like this. Look at Bitstamp, for example.
Oh, yeah, Bitstamp.
They came in third in the ranking. They have a really strong global presence, fantastic safety record.
Yeah, this seems solid. Super solid. But get this. They're about to be acquired by Robinhood.
Wait, Robinhood?
Yeah.
The, meme stock haven.
The one and only.
They're getting serious about crypto.
Looks like it.
But why Bitstamp? What's the plan, do you think?
Well, Robinhood's been, dabbling in crypto for a while, especially with those meme coins going crazy during the election last year, Dogecoin and all that.
Right.
But buying Bitstamp, I mean, that's a respected exchange, well-established. Yeah. That's a whole other level of commitment. It gives them instant credibility and expands their reach into Europe.
So are they going to merge the platforms or, keep them separate?
That's the million-dollar question. For now, they're saying they'll operate separately, but who knows what the long-term plan is.
Right.
This whole acquisition is actually part of a bigger trend we're seeing, this consolidation in the crypto exchange space.
Interesting. So fewer exchanges, but bigger ones.
Exactly.
Is that good or bad for, the average investor? Well, it could mean, more standardized security practices, maybe lower costs, with those economies of scale.
Yeah, that would be nice.
And potentially a more mature and regulated market overall. But then there's the worry about less competition,
Right.
And potentially less innovation if just a few giants end up dominating everything.
So it's a trade-off, I guess. More stability, maybe. But maybe less of that, scrappy, innovative spirit that got a lot of us into crypto in the first place.
Absolutely. And speaking of innovation, we can't forget about Binance, right?
Oh, yeah, Binance. They're back.
Back in the rankings at number 4 after all their legal troubles. I mean, their trading volume is massive. Yeah. Especially in places like, BRICS countries and Europe.
Yeah, they're huge.
But they still haven't had a formal audit, which,
Yeah, that's a little concerning.
Yeah, it raises some red flags for sure.
It does. But I've also heard they provide those on-chain snapshots to prove their reserves. What exactly are those? I'm not totally clear on that.
It's basically like a public record of their holdings that, anyone can check.
Okay.
Kind of like, looking through a shop window and see what's in stock.
Okay.
It provides some transparency, but it's not the same as having a full independent audit. You know what I mean?
Yeah. So transparency is good, but an audit would be better.
Agreed.
Especially given Binance's, their history.
Oh, yeah, for sure. But honestly, Binance is a fascinating case study.
Yeah, it is.
They've been through a lot, including a big management shakeup recently. And they're really pushing hard on compliance now to try and regain that trust.
Yeah.
Their founder, Changpeng Zhao, CZ, as everyone calls him, he's a legend.
He is, yeah.
His whole story, going from prison to being one of the richest people in the world.
It's great.
It's an incredible story.
It's a total comeback story, right? From prison to crypto kingpin.
It is.
So, they're trying to clean up their act, but they also still have that, rebellious streak.
They do, yeah. It's hard to predict what they'll do next.
I know, right? And then there's Robinhood at number 5, just scooping up Bitstamp, riding that whole meme stock and meme coin wave.
Yeah.
They're attracting a younger, more, I guess you could say, speculative crowd, right?
Yeah, for sure.
Which just adds more fuel to the crypto fire.
Absolutely.
Yeah.
So we've got these established giants like CME Group and Coinbase, and then these disruptors like Binance and Robinhood shaking things up. It's a really interesting mix.
It is, but Forbes' ranking has 25 exchanges on it.
It does.
So what other, hidden gems are lurking further down the list?
Oh, there's some fascinating stories down there. And some really interesting trends emerging, especially outside the top 5.
Okay, so should we dig a little deeper?
Absolutely.
All right, let's do it. Welcome back, everybody. So last time we were talking about those big names at the top of the crypto exchange world.
Yeah, the heavy hitters.
The heavy hitters, exactly. But Forbes ranking actually lists 25 exchanges, right?
That's right.
So what's going on beyond like that top tier? Are there any hidden gems worth checking out?
Definitely. There are some really interesting exchanges further down the list.
Hmm.
But before we get into that, I think we need to talk about something super important that a lot of people overlook.
Okay.
It's the actual cost of trading on these exchanges. And it's not just about the fees they advertise either.
Right.
You have to factor in something called the spread.
Oh, yeah, the spread. I remember seeing that term in the Forbes article, but honestly, I kind of skimmed over it.
Yeah.
So can you explain it? Like I'm like totally new to this whole crypto thing.
Sure.
What is it and why should I care?
All right. So imagine you're buying Bitcoin.
Right. Okay.
And the price is, let's say, around $100,000. On any exchange, there's going to be a slightly higher price to buy and a slightly lower price to sell at the same time.
Okay.
That difference, that gap between the two prices, that's the spread.
Gotcha.
It's how exchanges make money, but it also eats into your gains.
Right.
Or adds to your losses, depending on what you're doing.
So if I buy high and then sell low, which let's face it, sometimes happens.
It happens.
That spread is just gonna like make things worse.
Yeah, it'll magnify your losses.
Okay, got it. Now, how does spread compare across different exchanges? Is there a big difference?
Oh, there's a huge difference.
Really?
Forbes calculated that the average spread across all 25 exchanges they looked at was 64 basis points.
Okay.
And remember, 100 basis points equals 1%. But here's the thing. Some exchanges have spreads way above that average.
Oh, wow.
Some are pushing 140 basis points or more.
Ouch.
Others, like Coinbase, for instance, they have super tight spreads on 19 basis points.
So even if an exchange is advertising like low fees,
right,
a wide spread could totally wipe out any of those savings.
Exactly. You really have to look at the whole picture.
What about like Binance? They're known for their low fees, but what's their spread like?
Binance is actually very competitive when it comes to spreads.
Okay.
Their average is around 21 basis points.
Wow, that's pretty good.
It is. They make their money on volume, basically.
Right.
They attract a ton of traders with their low overall cost.
Yeah.
And that's key trend that Forbes pointed out, those bigger exchanges. They often have tighter spreads, which is good for you, the trader.
Oh, so in this case, going with the crowd actually works in my favor.
It can, yeah.
Interesting. But hold on, Coinbase, they have a lot of volume too?
They do.
But their fees are higher, right?
Right. Are they, like, breaking the rule?
They're definitely an exception. They can charge more because of their brand recognition, their focus on regulation, and their platform is just really easy to use.
Okay.
It's like, you know, the Apple of crypto exchanges.
Right.
You're paying a bit extra for the perceived quality and peace of mind.
Yeah, I get the Apple analogy. But for someone like me, who's not, trading millions of dollars.
Is Coinbase really worth the extra cost? Are there other options that are like more affordable but still good?
Absolutely. And that's where things get interesting. Some exchanges are catering to specific types of traders with like tiered pricing.
Okay.
So Coinbase, for example, has their subscription service, Coinbase One.
Yeah, I have heard of that.
It eliminates all trading fees for a monthly fee.
Oh, wow.
So if you trade a lot, it can be a really good deal.
So for frequent traders, it's like a VIP membership.
Exactly.
Pay a flat fee and then trade as much as you want.
Exactly.
I like it. Any other examples of exchanges with like creative pricing structures?
Yeah. Revolut, the digital bank, they have their main app, which has pretty high fees for crypto trading, like 249 basis points on average.
Ouch, that's rough.
It is, yeah. But they recently launched a separate web platform called Revolut X.
Okay.
And their fees there are as low as 10 basis points per trade.
Wow, that's a huge difference.
It is. It seems like they're targeting more active traders who are really, focused on costs.
It's like they're testing the waters, seeing what works for different types of crypto users.
Seriously.
Smart. So we've got fees, spreads, tiered pricing. Anything else we should be watching out for when it comes to costs?
Always read the fine print.
Okay.
Some exchanges have these hidden fees for things like deposits, withdrawals, or even like inactivity.
Seriously?
Inactivity.
Yeah, like if you don't use your account for a certain period of time, they might start charging you.
That's sneaky.
It is. It's like those baggage fees on airlines, They get you when you least expect it.
The worst. Okay, so we've talked about costs, but what about volume?
Right.
That's another important metric, right?
Absolutely. It's not just about how much an exchange charges, but also how much trading activity is happening on the platform.
Yeah, makes sense.
So volume is important because it indicates liquidity.
Liquidity. Okay, break that down for me.
Think of it like this. Let's say you have, I don't know, a rare collectible you want to sell.
If there are only a few people who might be interested in buying it,
Yeah.
it could take forever to find someone willing to pay what you want.
Right.
But if there are, like, thousands of eager buyers out there,
Mm-hmm.
you'll sell it in a snap, right?
Makes sense.
Same thing with crypto. The more people buying and selling a particular coin on an exchange, the easier it is to trade it quickly
Yeah.
and without affecting the price too much.
So high volume means more buyers and sellers, faster trading, less price impact. Got it. So what about low volume? Is that a bad sign?
It can be. If an exchange has really low volume, it might be hard to buy or sell the coins you want at a good price. It's like going to a deserted flea market, you know?
Yeah.
You might find something cool, but good luck finding a buyer when you're ready to sell.
Good analogy. So volume is important, but there's a catch, right?
There is.
I've heard that some exchanges have been accused of, like, faking their volume numbers.
Yeah, that's true. Some exchanges have been caught inflating their volume to make themselves look more attractive to traders.
So it's kind of like a popularity contest.
In a way, yeah.
Yeah.
So always take those big volume numbers with a grain of salt. Do your research, read reviews,
Yeah.
and try to find independent verification if you can.
Trust but verify. Good advice. Okay, so we've talked about costs, volume.
Mm-hmm.
What about audits? How important are those when choosing an exchange?
Audits are crucial, really,
Okay.
but not all exchanges are equally transparent about them. A good audit, conducted by a reputable firm,
Mm-hmm.
it'll examine the exchange's financial records, their security practices, all their operational procedures. It's like having an independent inspector come in and make sure everything is on the up and up.
So it's basically verifying that the exchange is doing what they claim to be doing, right?
Yep.
Handling our money responsibly, keeping our crypto safe.
Exactly. But the thing is, not all exchanges have been audited.
Really? So should that be a deal breaker for me?
It depends. Some smaller exchanges might not have the resources to do a full audit. But for the bigger players, especially those handling billions of dollars, the lack of transparency is a definite red flag.
That makes sense. So Binance, for example, even though they have those on-chain snapshots,
Right.
a proper audit would give more, like, comprehensive assurance.
Absolutely.
Yeah.
It would show that they're willing to open up their books and be fully transparent.
Okay, I'm getting it. So we've covered costs, volume, audits.
Mm-hmm.
What other factors should we be thinking about when choosing an exchange? I'm ready to dive even deeper. Okay, so we've, like, really gotten into the nitty-gritty of choosing an exchange, you know,
Yeah, we've covered all.
fees, security, all that stuff. But I'm curious about the bigger picture. Like, what's the future of all this? Are we going to see some crazy sci-fi stuff happening with exchanges?
Well, maybe not flying cars just yet.
Uh-huh.
But the future of crypto exchanges is definitely, it's definitely exciting. There are two big forces at play right now, you know,
Okay.
regulation and decentralization.
That's interesting.
It's like this tug of war, you know. Governments are trying to bring some order to the Wild West of crypto.
Right.
But the whole idea of crypto is about freedom,
Uh,
right? And cutting out the middleman.
Yeah, exactly.
So it's this tension between those two forces.
So are we heading towards a world where crypto is just, like, another part of the traditional financial system? Or are we going to see something completely new, like a totally decentralized system?
I think it'll probably be a bit of both, honestly.
Okay.
Regulation is inevitable, right? Governments want to protect investors. They want to prevent money laundering.
Mm-hmm.
And let's face it, they want their cut of the pie.
Yeah, that's always a factor.
We're already seeing stricter KYC rules, AML regulations, tax reporting, all that stuff.
Yeah, yeah.
This is probably going to lead to even more consolidation in the exchange space. The smaller players, they might struggle to keep up with all the rules.
Yeah.
So they'll get absorbed by the bigger exchanges.
Okay, so fewer exchanges, but bigger and more regulated.
Right.
Does that mean the end of that Wild West feeling that, you know, a lot of us were drawn to in the first place?
Not necessarily. I mean, the cool thing about crypto is that it's always evolving. So while those centralized exchanges are getting more regulated,
Yeah.
we're also seeing this rise of decentralized exchanges, DXs as they're called.
GXs?
Yeah, DXs. These platforms cut out the middleman entirely.
Wow.
Users trade directly with each other.
Wait, so no more Coinbase, no more Binance. I just, like, become my own exchange.
Kind of, yeah.
Yeah.
It's still early days for DXs.
Okay.
But they're gaining traction, especially with people who really value privacy and control, you know, and censorship resistance. They usually run on blockchain technology.
Right.
Smart contracts handle the trades automatically. So imagine this global peer-to-peer network where you can trade crypto without anyone's permission.
That's a pretty powerful idea. But aren't DXs like way more complicated to use?
They definitely have a steeper learning curve, yeah.
Yeah.
And they usually have lower liquidity than those big centralized exchanges, which means it can be harder to trade larger amounts without, you know, moving the price too much.
Right.
Right. But they're getting easier to use all the time. And there's some really cool innovations happening in the DEX space.
Okay, so maybe we'll see a future where both types of exchanges exist, like centralized and decentralized, each catering to different types of traders.
Exactly. It's like choosing between a regular bank and a credit union, you know? They both have their pros and cons.
Yeah, that's a good analogy. And maybe the lines between the two will even start to blur, right?
It's possible. We could see some hybrid models emerge, you know, combining the user-friendliness and liquidity of centralized exchanges with the privacy and autonomy of DXs.
That'd be interesting. Okay, so lots of possibilities on the horizon. What about the tech itself? Are there any advancements that could, like, completely revolutionize how exchanges operate?
Absolutely. There's some big breakthroughs happening in blockchain tech right now, especially with Layer 2 solutions.
Layer 2 solutions?
Yeah, they're basically these add-on networks that sit on top of existing blockchains, like Ethereum, and they allow for much faster and cheaper transactions. This is huge for DXs because they've always been held back by, you know, slow speeds and high fees.
Right.
So this is like adding a turbocharger to the blockchain, basically.
Right.
Makes everything run smoother and more efficiently.
I like the sound of that. What else is coming down the pipeline?
Another exciting development is cross-chain interoperability.
Okay.
It allows for seamless communication and asset transfers between different blockchains. So imagine, like, trading Bitcoin for Ethereum directly without having to go through a centralized exchange.
Wow, that would be amazing.
It opens up a ton of possibilities.
Yeah, it's like breaking down the walls between countries, right? Allowing for free trade and collaboration.
That's a great way to put it. And this is just the beginning, honestly. Artificial intelligence, machine learning, even quantum computing.
Wow.
All of those technologies have the potential to transform the crypto exchange landscape, making it more secure, more efficient, more accessible, you name it.
Okay, my mind is officially blown. It sounds like the future of crypto exchanges is going to be wild.
It is.
But let's not forget about the human element here.
Right.
What about all the people who are just starting to get into crypto? Are they going to be left behind in all this, like, crazy technological advancement?
That's a really important point. As crypto becomes more mainstream, education and financial literacy are crucial.
Yeah,
you know,
for sure.
Exchanges have a responsibility to, like, guide new users, explain things clearly, and help them navigate this whole thing safely.
So it's not just about building cool tech.
Right.
It's about actually empowering people to make smart decisions and participate in this new financial system.
Exactly. And as exchanges evolve, they could become much more than just places to trade. They could offer all sorts of services, you know, like lending, borrowing, staking, even insurance. They could become these true financial hubs for the crypto world.
So it's like the evolution of the internet, right? It started as this simple way to share information, and now it's this massive ecosystem that affects, like, practically every aspect of our lives.
Exactly. And the future of crypto exchanges is just as unpredictable and full of potential. It's going to be a wild ride, that's for sure.
I can't wait. Well, as we wrap up this deep dive, I think the biggest takeaway is that the crypto exchange landscape is constantly changing. So do your research, stay informed, and choose platforms that, you know, align with your goals and your values.
Couldn't agree more. And remember, there's no one-size-fits-all solution here. Whether you're looking for the stability of those established players, the innovation of the disruptors, or the freedom of those decentralized platforms, the future of crypto exchanges really does have something for everyone.
Well said. The key is to just, you know, stay curious, stay informed, and never stop exploring. The world of crypto is full of surprises, and that's what makes it so exciting. Thanks for joining us on this deep dive, everyone. And until next time, keep those crypto minds curious.